Market analysis. When you analyze the markets you trade, you need to make sure that it's purposeful. Let me show you at least one good way to analyze the market. First, select the market or markets you're most interested in. Now, this could be directly from your watch list. Second, select the time frames that fit your trading style. Third, identify what has happened in the recent past. We're specifically focused on locations of importance and direction. Fourth, ask the question, what will happen if the market goes up, down, or sideways? It only can do one of those three things, and we want to be prepared for either scenario. Fifth, answer the previous question with an answer that fits your trade setups that you use. So for example, if the market goes up, what will you do that fits your trade setup? If it goes sideways or down, what will you do that fits your trade setups that you use? So let's take a look at a real life example. This is a swing trade example on a daily chart. The market Analize is going to be the QQQ. That's the NASDAQ 100 ETF. Number 2, the time frame that I'm going to use is the daily chart. Recent past, is it an uptrend? So bullish. Question number 4, up, down, or sideways? I'll show you that on a chart. And same with number 5, the trade setup. Because there's 3 separate trade setups that can be used depending if it goes up, down, or sideways. Here's our QQQ daily chart. So the day that we're focused on here is the last candle on the right. So when we look at the market Analize, again, QQQ, time frames, weekly and daily. In this case, the weekly would be a higher time frame. The daily is the one that you're looking at right now. The recent past, that's an uptrend. So we have an uptrend or bullish environment. And then we ask ourselves, what will happen if the market goes up, down, or sideways? And that's what we want to look at right now. So let's start with the first one here at the top. Question number 4, if price goes higher, what are we going to do? We want to have a plan. We want to know what we're going to do if price goes higher. If price goes higher, I will wait, not trade, for a pullback or trade my breakout trading method on a lower time frame. So I have 2 different trading methods I can use. I can use a breakout trade on a lower time frame, or I just simply wait for a pullback, which basically means I'm not doing anything at that moment if price goes higher. Okay, so I know what I'm going to do if price goes higher. Now let's look at the next one, the middle one. If price trades sideways, I will use my time decay option strategies to trade. Otherwise, I'm just going to wait. Well, what if price goes lower, the third option? If price goes lower, I will be ready to take long positions around the $380 price area. So if price drops down lower, I will be prepared to buy using my bullish trading setups. All right, so we don't know what's going to happen at the time this all takes place, but we do know that it will either go up or down or sideways. So we want to make sure that it fits our trade plan as well. If price does drop down into that $380 area, will it fit my actual trade setup? Well, I know it will because I know what my trade setup is, and that's what we need to be prepared for. But here's the result. It went down. It actually gapped up, and then it went down and down a lot. Price did come right into that $380 area, and it shot right back up, only to come right back down, test it again, and then shot up higher, and then came down and tested it a third time. So when we know what to do if any of those 3 scenarios happen, we're confident in taking action on our plan. And we're prepared. We're not guessing, what should I do? What should I do if this? What should I do if that? We're prepared. So let me take a zoom in look here. So the question now is, did I actually follow my plan? Well, here's the result. This was in December of 2021. And you can see I took 3 trades during that time. Remember, it hit it 3 different times. So I took 3 trades total on this one. And you can see the actual results. Size, now these were option trades. So size 40, that's 40 contracts, 50 contracts, and then 7 contracts, okay? So we've got QQQ, that's the market. Here's all the details in there. The status, the size, that's how many contracts I took on using the options. The entry and exit price. You could see the dates that I opened and closed those positions. The hold time, pretty short. Only a 2-day swing trade for those first 2 and then a 1-day trade for the other one there. And then you can see the returns, commissions, and net return as well. Okay, so let's focus in on this one here. Okay, so there it is right there, open date, close date. And here it is on the picture. Okay, so right there, the trade was opened, and you can see where the trade was closed 2 days later. All right, so that's what actually did when price came down into that area, rallied back out. So I was able to capture that rally. Now notice my entry was not the exact low and my exit was not the exact high. Get used to that, okay? I don't need to get the exact low and high. It sure is great. I mean, I'd love to get that every single trade. That's just not realistic. I have no problem getting the 70, 80, or 90% in between. Nothing wrong with that at all. All right, here's the next one here. This was on December 6th and then closed out on the 7th. So that was 7 contracts on that one there. So here it is here. You can see the dates, and then here's the actual entry. So that was the first time that price came into that 380 area. So I opened that. I got a little better price there, closer to the low and a little closer to the high on that one too. So a little better timing on that one. But that was the actual open and close. And again, that was just a 1-day trade right there, 1-day round trip on that one. So in this particular market, price came into that 380 area twice, and I was able to capitalize on it twice. Now, that's just being prepared, planning ahead. I did not know if price was going to go up, down, or sideways. None of us do. But we do know one of those 3 things will happen. And we need to be prepared for either scenario. So in this case, price went lower, and I said, okay, let me use my buy setup tactics on that. I executed that trade, and I had 2 nice swing trades from it. Let's take a look at the rest of the month. Again, we're looking at December 2021. You'll see those QQQ trades in there as well. So just for that month alone, that was a 75% win rate. Average return was $2,000 per trade. Average percentage return, a little over 34%. Profit factor 14, and then a little over $33,000 a cumulative return for the month. You can see the winners and losers there. They are ranked from losers all the way down to winners. There were 16 out of 16 trades shown right there as well. So the whole point here, folks, plan your trade like a surfer planning what wave that they want to surf. Now, they might let many waves go by that do not meet their specific requirement, their criteria that they want to surf. But when they find the right one that they want to surf, they take action. And that's exactly what we want to do as traders. Plan ahead. And when the market meets your trade setup criteria, take action on it. Let's talk about action steps. Add the 5-step process to analyzing your charts in your trading routine. Pick a chart, any time frame, and go through the questions. Market analyzed, time frames, what happened in the recent past, up, down, and sideways analysis, and number 5, what trade setups fit my trade plan if it goes up, down, or sideways. Now, this will take some time at first. You're going to need a lot of practice on this. That's okay. It just means your skill is going to increase here, okay? Be patient and practice. Train your brain to see what you need to see. Now, I will say this also. This analysis, this 5-step analysis that I've shown you, it's good and works well. You might want something a little bit different. Again, my style might not be compatible with yours. I don't know. I don't know exactly personally what you're doing here. You can tweak it and adjust it. The important part here is that you have some type of process that you use to scan and prepare for trading opportunities. You want to plan ahead. One of the biggest weaknesses that I've seen many traders do is they just pull up their charts. They see a green candle or a red candle and they buy a green candle, they short a red candle, and then that's it. They're reacting to what they see on the chart. We want to prepare first, and then if it meets our specific criteria, then take action. It'll make a big difference in your trading. All right, folks, once you're done with that, you're done with Module 2. Go ahead and continue on to Module 3.